This is Hillary Kramer. We are live from the Dallas Money Show, and I'm very pleased to bring you Louis Navellier right now. Louis is the father of stock market investing, and Louis is going to answer a few very important questions as we are at the crossroads of the market at this current time. Louis, what are the sectors we should be in right now, given the pressures of this 10-year U.S. Treasury bond, that the yield continues to rise and it's scaring the market?
Great question. Obviously, when yields go higher, it makes the dollar stronger. We've been in a strong dollar environment, and that forces you to invest more domestically. So the tail end of the S&P will do better than the top end because it's more domestic. So small and mid caps tend to do well. But any domestic industry, healthcare, energy, retail, and they've all candor been quite strong this year. So we just want to be more domestic.
Okay. Now, I can't help but bring up the fact that I have heard you for years negative and pessimistic on Elon Musk's Tesla. And you're real positive on growth stocks, and you look for growth and those kinds of trajectories. How is it that you got it so right? What did you know? And do you have any change in mind now?
Well, I know more than I should know because my friend runs the Reno battery plant, and there's been a lot of organizational problems. And I'm not anti-Tesla the car. I have one of those electric Audis on order. I give a deposit. I have an electric Porsche on order. And so electric cars are here to stay. But the big companies like Volkswagen are going to be losing money on them to meet emission standards. So if my name is Tesla and you've got quality competitors coming that are going to lose money for other reasons, you're in trouble because, when Porsche and Audi are undercutting you, and Jaguar and Mercedes, there's a problem. There's another problem with the Tesla batteries. They're round, they're big, they take a lot of the car. There was an incident since I saw you last, where my daughter's high school, where two of the boys died in a 30-mile-an-hour crash. In fact, they were burned alive. My daughter's boyfriend pulled the guy out of the back seat. And, cars should not explode when there's a 30-mile-an-hour crash.
This is a Tesla.
This is a Model S, but the batteries were ahead of the wheels. So when they came back, the batteries caught on fire. The firemen come, and it's hard to cut an electric car because they don't want to get electrocuted themselves, and it's just very, very tragic. And the NTSB is all over that. They're going to force a redesign. There's so many issues with Tesla, between the quality control, the NTSB, the competition that's coming. I just don't see them making it. If they make money in the third quarter, it's because they're selling those Nevada tax credits. And, Mr. Musk is probably going to behave a little bit more, but obviously he was out of bounds for a while.
Okay. Well, thank you for being so candid with that answer. In terms of the market right now, you always bring the best and best performing stock opportunities to all of the money shows. What 3 or 4 stocks do you really feel compelled about right now, and you think are good buys as we are in anywhere from the 7th inning, 9th inning, of maybe the 10th of this bull market?
Our largest holding is Nvidia. I've had it for a long time. It's beaten 10 quarters in a row. Things are slowing down, but their operating margins are fat and happy, and it's a phenomenal company. Another bulletproof holding we've had was Align Technologies to make the Invisalign system to straighten your teeth and fix your bite, and they're very hot in emerging markets. Apparently people want straight teeth. Those are 2 of our largest holdings. We have a lot of energy stocks right now, mostly refiners, because the crack spread between sweet and heavy crude is so wide. Valero, HollyFrontier, Phillips 66 are all examples of that. There's a REIT I really like, ABR. It's a trust. It yields over 8%. Good sales and earnings growth. Good dividend history. I love Boeing. Again, good history of increasing dividends. Record order backlog. There's a lot of good things right now. I think the market will get more narrow, more fundamentally focused. It has not been fundamentally focused this year. It's been short covering and some gyrations and oscillations. But long-term fundamentals will rule the roost, and valuations are still fine despite the little backup in interest rates.
Okay. Louis, thank you so
Thank you.
much. Thank you. We've been speaking with Louis Navellier here at the Dallas Money Show.